24 months as we add AI to user interfaces and be able to just express our intents and have solver networks take care of what we want done and probably take 2 seconds to get things done. And in the United States of America, it is now safe and explicitly legal to be a blockchain company. So that's great for us because it's been hard for a few years under the previous regime. But it's also really interesting for organizations like BlackRock, for software developers in TradFi or in Web2, because now they can feel comfortable holding tokens, participating in DeFi, or building applications for consumers. We've been building a lot of infrastructure, some great applications for crypto nerds or art nerds, but we really need the big unlocks that will come when Web2 entrepreneurs and developers come and make use of Web3 primitives so that they can build applications that are essentially of, by, and for the community rather than building in a more adversarial mode as the legacy economy prefers.
So Ethereum's moment really is now where the Web2 and TradFi players all converge with the existing infrastructure, and it's incredibly exciting. One other massive milestone for adoption has been the ETH ETFs. Everyone's seen how spectacular the Bitcoin ETFs have been. Robbie, you have the largest Bitcoin ETF and also the largest ETH ETF. Could you give some context as to, on a relative basis and absolute basis, how the ETH ETFs have done and what you expect for the future, including potential for staking?
Yeah, well, I think there's a little bit of a misconception out there that the ETH ETFs have been meh. Yeah. And the truth is that, take ETHA, for example, iShares Ethereum Trust, had $4 billion in inflows in its first 6 months. The number of ETFs historically who have had more than that is a very short list. But when you compare it to IBIT and the Bitcoin ETF complex generally, it doesn't look that amazing. When you compare it to the actual ETF universe, it's actually been incredibly successful. So I know some people have that perception out there, but I can say that from a BlackRock perspective, we think it's been tremendously successful, both commercially and the way that these products have functioned, the market quality, liquidity, et cetera. There's obviously a next phase in the potential evolution of this because a ETF, it's turned out, has been a really, really compelling vehicle through which to hold Bitcoin for lots of different investor types. There's no question it's less perfect for ETH today without staking, right? That staking yield is a meaningful part of how you can generate investment return in this space. And all the ETFs, of course, at launch did not have staking. So if that is able to get resolved, and it's not a particularly easy problem. It's not as simple as a new administration just green lighting something and then boom, we're all good, off to the races. There's a lot of fairly complex challenges that have to be figured out. But if that can get figured out, then I think it's going to be sort of a step change upward in terms of what we see the activity around those products is.
So zooming out then, one of Ethereum's greatest strengths is also potentially one of its weaknesses, which it can do a lot of things. It has been a world computer. It's a substrate for the financial system. It's going to integrate with Web 2. How do we simplify this narrative? So a question for both of you is, how would you today describe ETH to your clientele when you're talking about the ETFs or talking about Ethereum's potential? Let's start with Joe.
So it is too big. It's too big to describe. It's like trying to describe the internet protocols and the web protocols. It can do everything just the way you can do pretty much anything on the web. And so there are people who can grok all of that, who can hold a lot of the complexity and the potentiality in mind, but most people are not going to be able to do that. And so we have to focus on applications that a user or a company cares about. And so we are at our broadband moment, and we will see applications like social graphs, decentralized ID, attestations, reputation, things that you can use inside of different applications. We simply have to focus on a little more narrowly and trying to describe the potentiality of Ethereum just leads people to being a little bit overwhelmed.
So if we narrow that scope, then Robbie, how do you describe ETH to the institutional crowd and to the TradFi crowd in terms of use cases or the asset?
Well, it's interesting because I think there's no question today that the investor narrative clarity, particularly for kind of marginal adopting institutions or financial advisors, is a lot clearer for Bitcoin as this digital gold story. But actually, ETH in some ways at the second grade level is easier to define than Bitcoin, but at the 10th grade level is a lot harder, right? Second grade level, it's a technology innovation story. Great. Once you start to get beyond that, it does get a little more vast, a little more complicated. It's about being a bet on blockchain adoption and innovation. That's part of the thesis as we communicate it to clients. And then when they want to get down to a little more tangible level, we could talk about some of the more specific use cases that it unlocks. And obviously there's a lot, but 3 that we focus on that have a lot of resonance with our client base is it's a bet to some extent on tokenization, on stablecoin adoption, and on decentralized finance. And so that, I think, resonates, but it does take a fair bit of education. And so we've been on that journey, and it's going to take, I think, more time.
Yeah, so one way that might resonate with people who spend a lot of time on the web is to look historically at where the web came from. The internet protocols were essentially open specifications, open protocols, open source. Web 1 comes along, same thing, open source, open protocols, open specs. And the web was a revelation to people. It felt safe and healthy. The communities were not at each other's throats on the early web. Web 2 comes along, so late 90s essentially, and suddenly there are great financial prizes to be won by companies that are building these social networks. And then they start adding AI to these social networks, and they start to know us better than we know ourselves, and they figure out ways to run psychological experiments on the population or addict the population to doom scrolling, and adding mobile to the Web 2 protocols and e-commerce, et cetera, turned it all into still an amazing global resource, but something that has increasingly grown toxic and has been destructive of the fabric of society. And so you can think of Ethereum as a major foundational component of Web 3, and Web 3 is the re-decentralized web. So Web 3 is open source, open protocols, open specifications, lots of people, lots of projects collaborating with one another, building things of buy-in for the community rather than in an adversarial perspective.
So one of the best parts about Ethereum is it is a technology platform that will continually evolve to onboard the whole world, from institutions to Web 2 players to all consumers. For both of you, what is on your wish list for what Ethereum needs to accomplish to really cross the chasm for full institutional adoption? What are the 1 or 2 major things that we need to see to actually unlock full adoption, starting with Joe?
Ethereum version 1 was never meant to be scalable. We understood that we wanted to build this programmable blockchain, smart contracts that anyone could permissionlessly build on and permissionlessly access. Essentially the idea was to re-architect all the systems of the world on sounder foundations, and those sounder foundations were essentially invented by Satoshi in the form of decentralized trust. We built Ethereum version 1, and it kicked off a remarkable amount of activity and innovation, quite a sophisticated proof of concept, essentially. And it has evolved to the point where we needed to add scalability. We needed to try to figure out how to turn this thing into many things, essentially, that all communicate well with one another. So in adding scalability, we had to do a divergent exploration where we tried to build lots of this idea of execution sharding inside the protocol. That was too complicated at the time for the technology to address, and so we threw it out to entrepreneurs and researchers in this divergent phase, and we have achieved horizontal and vertical scalability. And so any new innovation tends to uncover, either create or uncover other weaknesses. And so the weaknesses that we introduced, and we knew we were going to introduce them, was essentially fragmentation of the ecosystem and loss of synchronous composability. And so there are many efforts right now to do two major things. One is reduce fragmentation in the ecosystem, get back to synchronous composability or near synchronous composability. Intent-based architectures and solver networks are helping with that. And this idea of taking this zero-knowledge proof technology that we developed and bringing that down into the Ethereum protocol and enabling lots of different Ethereum machines to stay in sync and be essentially native rollups. That's one major set of research initiatives, and the other piece is just related to that, basically to beef up layer 1 because it needs to handle the world's transactions.
A lot of users. Robbie, what's on your wish list for you?
Well, I feel like, you just asked for insights on the game of football, and he's Tom Brady, and I'm the ball boy. So I won't try to compete with that answer, but I'll just say maybe very practically from an asset management perspective, one of the things in the roadmap that will help, particularly as we were talking about staking and how you make those work in ETFs, having XQs ultimately come down and be more predictable will really help in that way.
Yeah, so in having institutions like BlackRock serve as a forcing function for our ecosystem, for our technology, for our different research teams is wonderful. So we do a lot of thinking about things that they care about. XQ is one of them. Balances, max effective balances, reducing the number of validators, reducing the number of the amount of bandwidth necessary in these peer-to-peer systems. If we're looking at the ETFs and wanting to add yield, one of the major dangers of staking is that you could be slashed, and that's the way it's supposed to work. But if we can do things to evolve the protocol or just evolve how the ecosystem works, for instance, we have 5 execution clients that all sync to one another according to a specification. If we can make sure that all the activity is very evenly distributed across those 5 clients, then any sort of staking penalty will be much smaller than if there's too much concentration in one of those clients. So.
But Ethereum is responding to demand and institutional adoption, so we appreciate everything from like BlackRock leading the charge on that. Last question, and zooming out, we are in a new paradigm of blockchain adoption. There's a lot of different players out there. There's a lot of competition out there. Ethereum was founded on the basis of decentralization and being a resilient network. I'll zoom out and ask, as the final question, does decentralization matter anymore from an institutional standpoint? And what value do they put on a decentralized network? I'll start with Robbie.
Well, I think it does matter. I think some of the negativity around Ethereum in the narrative lately is very overdone. There's a lot to be optimistic about. Joe's obviously characterized that very eloquently. When you look at our experience, take Biddle as an example, there was no question that the blockchain that we would start with our tokenization on would be Ethereum, right? And that's not just a BlackRock thing. That's really anybody who would enter this space. That's the natural default answer, right? That's really important. And you see even today, we're excited about having this be a multi-chain product now. We're seeing assets across all of them. But Ethereum has, a significant majority of the assets still. And so clients clearly are making a choice that they do value the decentralization, they do value the credibility and the security, and that's a great advantage that Ethereum continues to have.
Yeah, so decentralization is the whole point. It's why our industry exists. There will always be well-resourced, patient actors that will corrupt, co-opt, censor systems if they're able to. There are famous incidences where the NSA in this country has been part of the cryptography ecosystem and adjust parameters to make it more easy to infiltrate or manipulate systems. The idea of sufficient decentralization is reasonable. So not every network has to be perfectly rigorously decentralized across all relevant dimensions, but some of them do. Bitcoin does, Ethereum does, and we will continuously progress decentralization and guard it.
So I think we're at time, but this is a new era for Ethereum. Very, very thrilled to have Robbie and Joe up here, and we're excited to see all the institutional adoption that's about to happen.
Please welcome Jack O'Halloran.
Hey everybody, how's it going? Pretty exciting day, huh? All right, that was an awesome panel. A lot of talk about adoption. That's what I'm talking about. So, quick show of hands, who took an Uber or Lyft here today? Okay, which data center did you use? And how much did it cost you to process that data center transaction? Was it Google Cloud, AWS? No? You know what? That's an invisible experience, an infrastructure experience that you didn't need to know what you're using on the back end. And that's one of the things we've learned in Web 2 is that having invisible, frictionless experiences is how we grow and how we get mass adoption. Okay, so that's what I'm talking about today. I'm talking about invisible blockchains. All right, here we go. So quick question to ourselves. Are we ahead or behind where we should be as an industry right now? And it's a tough question to ask yourselves, but I think it's healthy to do it. Now, every time the market drops, our kind of normie hater friends, or even people in our different chat groups who get a little pessimistic will say, there's no real use cases for blockchain other than store of value. Speculation's the only use case. No one uses blockchain. It's just 500,000 people trading with each other. I personally think that's garbage, okay? I don't believe it, but my goal, and I think our goal should be to make that not even a topic of conversation, okay? By the way, I'm not talking about how many people have a Coinbase or a Binance account and own crypto assets. I'm talking about what Joe was talking about earlier, real use cases that drive the needle, real use cases of blockchain, global use cases of this technology. And hey, if you took an Uber or Lyft here today, that was a phenomenal use case to leverage cloud computing on the back end, okay? And it was a seamless experience. We need these experiences in Web3 so we can get across the chasm, okay? So this is, a very old chart here. Jeffrey Moore wrote this a long time ago. It's still true, okay? So who's familiar with this, crossing the chasm? Okay, we have some hands. So you have your early adopters are frankly your tech enthusiasts, okay? This is the early market. You then eventually hit this chasm and you have to get through it or you'll fail. But if you get through it, there's a tremendous trajectory because the pragmatists and the conservatives come soon after, the early and the late majority. Now, in order to get there, you also have to have great UX. I worked in mobile back in 2005. We had, it was a good technology. We had 92 of the Fortune 100 using this product. The only highly used product was email because nothing else worked well on mobile. We had all these other business applications. No one used them. Fast forward 3 years later, we have the iPhone. We have high-speed data networks. We've got much more powerful processors in our phones, and mobile takes off massively. It hit that curve for application usage, not just text, email, phone calls, all right? We're at that chasm now, but 16% is the number, all right? This is where real adoption begins. And again, we have surpassed this in a lot of categories. I think, you think about how many people have an account, how many people own Ethereum, how many people own Bitcoin, how many people own these different crypto assets. I think we're safely there. Let's look at gaming. Scale is one of the largest gaming blockchains in the world. We are a mass adoption blockchain. We're built for user experience, okay? Gaming now has over 30 million people a day hitting the blockchain. I think we need to applaud ourselves for this. It used to be thousands a couple years ago. We've been on an exponential curve. But there are 3 billion people that play video games every day. So we're only 1% adoption, not 16%. But the good news is once you're at 1, it's much easier to get to 16. It's much harder to get from 0 to 1 in these spaces. So we need mass adoption. Another positive note, we're getting there on the financial side, really getting there. These are areas that require less clean, simple, easy user experience. Look at stablecoins. There were over $850 billion in stablecoin transfers volume in February. That is massive. And you know what? That is money and value moving almost at the speed of light, not taking a day to process, not taking this kind of archaic banking system. This is the new future of money rails working. Bitcoin market cap's over 1.65 trillion. This was, when I sent them the slides, so it's probably higher right now. But that's a win for store of value. That is a phenomenal store of value, okay? The reality, though, is we need more daily users for these use cases that really, really matter, all right? So then it's all about user experience. So I talked earlier about, and I saw, by the way, if you're listening online here or if you're not looking around, when I said, what data center did you use and how much did it cost for that to process it, everyone's like, what are you talking about, right? But in the world of blockchain, that's the reality. So Scale actually has taken a novel approach, and we got rid of gas fees all the way down to the core of the chain. And instead, developers pay chain fees. They rent block space. It just opens up this new user experience. It's still economically viable. People are getting paid to run servers. Entities are getting paid to run servers and infrastructure. But this is an example when you combine phenomenal UX addition with high-speed blockchain execution, zero gas fees for the end user, and integrate that with advanced custodial wallets and semi-custodial wallets, and even non-custodial wallets with some very interesting new UX features that are coming. We can let normal people who aren't engineers, who don't have a ledger device, don't really know how to use sophisticated products, interact with blockchain, okay? Another really critical topic, maximal extractable value, MEV, okay? This is where blockchains don't finalize their transactions, and what happens, a blockchain submits a transaction, and guess what? Anybody running a node can see that transaction until the transaction finalizes. And then you have front-running, sandwich attacks. Essentially, money and value is being taken from every user and every transaction through bots. Just last week, somebody did a 220K swap on Uniswap, and they ended up with $5,000 after. They swapped USDC to USDT. No, hey, they didn't use the Uniswap UI. If they had, they would have been protected. They used a different system, but the problem is, this is something that we think needs to be fixed. This is the next frontier for scale also, is going and trying to fix this problem to make sure these things can't happen. We need to have safe waters if we're going to really hit these adoption numbers that we are going for. We also need to offer fundamentals. The next growth stage is all going to be about giving tangible value to users, okay? Real value. And there's some phenomenal use cases out there. Really excited about them. So just a little proof this works. And I have to say, this is fun for me now. We started Scale over 7 years ago, all right? And the first couple years the network was live, we would count our users, our unique active wallets, users, and transactions in the thousands. We now have over 1 billion transactions. We have over 3.3 million wallets in the last 30 days, over 91 million transactions. So the model's working, and I'm not saying this to, talk just about Scale, but to say, when you really lean into building a positive user experience for consumer-facing applications, you can get dramatic results. But these numbers, frankly, are just the start. We're now in the top 10 of all blockchains and layer 2s in terms of transaction volume, and in terms of unique active wallets. And, but I think I look at this and our, set of competitors and collaborators, and as an industry, we're just getting started. There's a lot coming. Quick shout out to all the builders. There's over 300 applications building on Scale. I get the luxury every day of working with really smart people that understand blockchain, but they also understand how to build applications. And there's some exciting things. There are some exciting things happening. So I just want to say, we are crossing the chasm now, okay? And growth will be led by UX-friendly blockchain adoption. I also want to say, because the President of the United States is speaking here in just a minute, we also have this new government regulation that's it's enabling businesses to come and get in the game. I work with some of the biggest sports leagues in the world, some of the biggest brands in the world, and we got put on pause last year. There wasn't regulatory clarity. This is real. Guess what? They're all back in. 100% of them that stopped because they're like, oh, am I going to be able to do this? So this is going to drive real economic value. And Scale, we are a US project. I'm so happy I can say that now on stage, that we are headquartered in the US. So I think combining all these things together, we're teeing ourselves up as an industry to get to that next level of mass adoption. It's been my pleasure. Thank you so much. Have a great day. Goodbye.
Please welcome to the stage Jason Yanowitz.
How we doing, everyone? Good. I'm Jason Yanowitz. I'm one of the co-founders of Blockworks. In about 30 seconds, we have a historic moment. The President of the United States is going to address the Digital Asset Summit. This is the first time in history that a sitting president has addressed a crypto conference. I know everyone has their phones out, but please give a massive round of applause and help me welcome the President of the United States to address Digital Asset Summit.
To everyone at the Blockworks Digital Assets Summit. It's an honor to speak with you about how the United States is going to dominate crypto and the next generation of financial technologies. And it's not going to be easy, but we're way ahead. Just 2 weeks ago, we hosted the first ever White House Digital Asset Summit, bringing together many of the world's top leaders in crypto for a conversation led by our White House AI and crypto czar, David Sachs, who's a fantastic and very brilliant guy. That same week, I signed an order creating the brand new strategic Bitcoin reserve, and a U.S. digital asset stockpile, which will allow the federal government to maximize the value of its holdings instead of foolishly selling them for a fraction of their long-term value, which is exactly what Biden did. He got a fraction of their value. We're ending the last administration's regulatory war on crypto and Bitcoin, and that includes stopping the lawless Operation Choke Point 2.0. Operation Choke Point went beyond regulation, and I mean far beyond. It was a form of lawfare through government weaponization. Frankly, it was a disgrace. But as of January 5, all of that is over. I've also called on Congress to pass landmark legislation creating simple, common-sense rules for stablecoins and market structure. With the right legal framework, institutions large and small will be liberated to invest, innovate, and take part in one of the most exciting technological revolutions in modern history. It's so big, it's, I think, as big as you can get. Pioneers like you will be able to improve our banking and payment system and promote greater privacy, safety, security, and wealth for American consumers and businesses alike. You will unleash an explosion of economic growth, and with the dollar-backed stablecoins, you'll help expand the dominance of the U.S. dollar, and many, many years to come, it'll be at the top, and that's where we want to keep it. We only want to keep it at the top, always. I can already see that the energy and passion of the crypto community is the kind of spirit that built our country, and it is exciting to watch as you invent the future of finance. And right here, it's going to be right here in the USA, the good old USA. Together, we will make America the undisputed Bitcoin superpower and the crypto capital of the world. Thank you. Good luck. God bless America.
Please welcome to the stage Ben Strack and Stacey Warden.
Damn, Ben, can Blockworks pull on the firepower or what?
Yeah, quite a moment.
I mean,
Seeing
the President of the United States is unbelievable.
the first sitting president to address a crypto conference. So what a moment. It's a privilege for me to share the stage with Algorand Foundation CEO Stacey Warden.
Almost like the President of the United States.
Exactly.
Almost.
This has become quite a coveted time slot here on this Thursday morning. First, if we could just get a brief introduction, if you could briefly introduce yourself and just kind of share, where you were before jumping into leading the Algorand Foundation.
Yeah, I spent a lot of my career in traditional finance. I was at JP Morgan for 8 years. I worked for Mike Milken for 8 years. I worked in the Treasury Department. I ran the microcap markets for the NASDAQ for a number of years. So I have been in and around traditional finance for my entire career. I got interested in Bitcoin in 2013. I thought it was really a solution I worked a lot in emerging markets in developing countries, so I thought it was a very important solution to some of the issues that they face, and kind of never looked back. And the thing about crypto, it's a one-way street. You get on it, and you keep going further, and you never go back to traditional finance.
Yeah, and we'll get into as many topics as we can in the next 18 minutes or so. But first, we just saw President Trump address this conference. Wanted to get your initial thoughts on, those remarks and how you kind of expect this administration could help spur blockchain adoption.
Yeah. Well, the main takeaway for me, and I don't know if you caught it because he did mumble the word just a tiny bit, but the Bitcoin algo strategic reserve was very important, I think, thing that he said. They're going to call it the AB reserve, algo and Bitcoin. No, look, he, make Algorand great again. He wears that hat all the time. So, he cares a lot about my blockchain, of course. But he did say, and he always says about making America first, and not just in crypto, but in everything. But it's just after the, as Mark Andreessen said, the foot on your neck, right? Like that we've had for the last 4 years to have, from the very highest levels of government, encouragement and support. And frankly, we don't even need, directive support. We just need to, not be hampered, right? Like we have the deepest, most liquid financial markets in the world. If we could just have a level playing field, we can definitely compete globally in the United States. So, of course, I was, like the rest of the audience here, very heartened to hear those remarks and how he's prioritizing the sector.
Yeah, and I remember chatting with you 3 years ago when you took over.
That was a long time ago.
Yeah. And now on the inside of this industry, how do you kind of see blockchain tech fitting into TradFi systems, opposing them as we kind of look to build this future-proof financial system?
Yeah, I mean, I don't think in a future-proof financial system they're going to be opposed at all. But when you look at the financial markets, they look like crochet. They're beautiful on one side, very seamless. But if you turn it over, there's all kinds of just nonsense going on in the back office. And, crypto is, and fintech tries to make that front side even better, but there's still all of this nonsense going on in the back. And crypto is very different than that. It is not a liability-based framework. It is, a bearer-based framework. It is actually digital cash. And a lot falls out of a framework like that can really help traditional financial systems and make them work better. For me, I think there's the big six, which I can just kind of rattle through. First of all, it will help with back office incredibly. If you are just writing to one ledger as opposed to having different kinds of, even internally in one institution, different kinds of balance sheets, talking to each other and constantly reconciling. Just have one ledger. You can get rid of intermediaries. I mean, if you look at just the most basic mortgage securitization vehicle, there are so many intermediaries in this. It's basically you set up a vehicle and then you get the mortgage payments, the principal payments, and the interest payments come in, and you have to divvy them out according to your waterfall. But, no offense to the calculation agents in the room, no offense to the paying agents in the room, all of this can be done in code. I mean, it's just really can be done with smart contracts. So. And these, just a mortgage securitization vehicle takes, 30 or 40 basis points, right? This is, 3 or 4 basis points. This is $30,000 or $40,000 on $1 million loan, right? So just the savings in that can be really profound, I think. And then I think the third thing is composability. Like everybody in this audience knows about DeFi composability. We talk about it all the time. But there's other aspects to it which are also quite important, like the ability to just embed finance in anything. A company building on Algorand called Ultrade, you can basically build a DEX. They can white label a DEX for that you can put in whatever platform you have, right? You can think about identity as a composable framework, Ben. Imagine not having to KYC for every single financial, counterpart that you, imagine being at a bank and not having to do KYC over and over and over. Imagine banks being able to share KYC framework. Stuff like this is, and then of course, I think this is number 4 on my list. You can, tokenization, we've talked a lot about that in this conference. You can create markets that didn't exist before. You can bring liquidity to markets that that didn't have liquidity before. We have a number of different examples of that in rental income, for example, where you and I are not going to buy an apartment building to get rental income. But that's a very good diversified source of investment income. And so now, with a company building on Algorand called Lofty AI, you can, and it happens daily because this is Web3. You can buy just for $50 a portion of a rental building or a property of some kind, right? Markets that didn't, a company building on Algorand has created a secondary market in airline tickets, for example. You don't have that kind of thing without Web3, right? And then last, Ben, all of this can be yours 24/7, 365 days a year. It doesn't. We think in Web3, we think it's cute that you wait for the opening bell in TradFi, right? All of this, your ability to move money 24/7, it's going to help finance. Financial traders, they make sure that they're, so electrons are not disadvantaged. They have cables on the New York Stock Exchange to make sure they're not one is even a tiny little bit further away from the other, but then they take the entire weekend off, and stop at 4 o'clock. It's ridiculous.
Right. And you mentioned tokenization. We've heard a lot of talk at this conference about tokenized real world assets, stable coins. So we'd just love to hear, blockchain adoption is going to come down to utility, and we've seen some gaining steam, these tokenized money market funds There's one available on Algorand.
Aberdeen money market fund.
Yes, BlackRock and Franklin Templeton have their versions of it as well. So just curious of your thoughts on the utility of those, how you expect those to be used going forward, and kind of how they might interact with stable coins in the future.
Yeah, I will say, and you wrote a very nice article about this just the other day, but I will say that tokenization cannot exist without stablecoins. Like, they are one and the same thing. Because if you have tokenized the asset side, but you haven't tokenized the money side, it just doesn't work. You're not going to, the whole thing that Web3 gets you, what we did with Aberdeen is it gets you an atomic swap. So what we did with Aberdeen is we tokenized a money market fund, and then a company named Quantos, who's a MiCA compliant, regulated by the Dutch Central Bank, programmable euro. It's actually not a stable coin, it's a programmable euro, digital euro. What is interesting about this is the fact that you can trade instantly, where clearing is settlement. You can trade instantly a tiny sliver of that Aberdeen money market fund for a digital euro, and you're done. And so if one leg of that trade is missing, you don't have anything, right? So they don't compete so much as they, I think, are essential together to get the real benefit of Web3.
Right. And we've also heard about the debate of what shouldn't be tokenized potentially. So would be curious to hear, just from your experience, maybe assets tokenized on Algorand with little volume, and how you kind of expect some of those to evolve over time.
Yeah, well, what I think is super interesting about entrepreneurs is that they always find a way, right? So a company called TravelX tokenizes airline tickets, and the relationship with your airline is terrible. You want to return your ticket back, and you can only fly in a year. You get all kinds of penalties, and so they had this idea: why don't we create a secondary market in airline tickets you can sell to somebody else? Okay, well, this is and you can, if you're a frequent flyer, you can also, give your lounge pass if you want to this person, right? And so, you can imagine you're going to college and you buy your ticket home for Thanksgiving for 4 years to save money, but you don't actually want to go home 1 year, blah, blah, you can sell it. Well, this market is not going to be very liquid. Like the number of people that want to buy my exact airline route on my exact day, it's going to be a limited number. This is not a deeply liquid market by any means, but the airlines, I used to always get asked, do the airlines like this or hate this? But it turns out the airlines just love this because they think of it now as a very easy way to take airline tickets back if they want. So your mother lives in Cincinnati and you are like a very good son. You bought a ticket way in advance to go to her birthday in Cincinnati. But it turns out that your mother decided to go off with her girlfriends and do something like in the Bahamas, and Taylor Swift is doing a concert in Cincinnati that weekend. Well, it benefits everybody. You sell your ticket back because you don't need to go, and then that airline is going to turn around and sell that ticket for 5x because somebody wants to go to that Taylor Swift concert, right? So it's just making these markets a bit more efficient, even though the underlying market is not that. A very interesting project we have going on in Italy with Enel. It's the second biggest utility in the world, tokenizing solar credits, right? So it's kind of the same thing. Why can't you get, and this is only enabled again in Web3, why can't you avail yourself of solar credits, right? What if you live in Ireland where it rains all the time? What if you live in an apartment building and you're on the 4th floor and you don't have access to the roof? You can buy an Enel solar panel, and that solar panel can be off in the field somewhere where it's sunny all the time, and where Enel gets huge economies of scale because it's better to build a lot of solar panels together in one field than it is to put them on like one solar panel on one roof all over. And so, maybe the market for trading solar credits is not going to be that liquid, but it's still critical to have that tokenization, because Enel, you can sell back to Enel if you don't use, all of your energy, you can sell back to Enel. It's tokenized, so it's a very efficient way to do things, even when the market's not that liquid.
Yeah, and shout out to my mom in Cincinnati.
Yeah.
So you've told me that the tokenization can be the easy side. The tech side of tokenization can be the easy part. The regulatory hurdles might be the more difficult part for people looking to get into this space. So what might be some of the main hurdles for the players looking to get into tokenization and how they're kind of handling that?
Yeah, I mean, I think it comes down to the same things we've talked about for 3 days. So there have been some very good regulatory panels at this conference, I will say. You know, there is this idea of, even though regulatory certainty is getting better everywhere, you know, in the US thanks to the Trump administration, but Europe and the UK and Japan have all made great strides, the UAE. But regulatory harmonization, I don't think we're still there, right? And so these things move so fast that you do need some harmonization globally, and we're working on that. So I think that's quite important. I also think that the good things for consumers about Web3 is just how fast you can move your money, right? But from a regulator's point of view, and from a bank, you know, an institutional point of view, the ability that somebody can pull money out very quickly, we saw this with Silicon Valley Bank, right? That's terrifying, and that's also problematic for financial stability, potentially, global macro financial stability. So those are the kinds of things you have to kind of figure out. You got to make sure that your advances over here in crypto don't lead to unintended consequences over here, right? But I do think, though, that we have gotten a little bit of a bad rap from regulation, because the bottom line for me and for, you know, people in this audience is that crypto can enforce regulation. You know, smart contracts can enforce KYC. On Algorand, you turn everybody off. It's at the protocol level. You turn everybody off and you whitelist them one by one by one. It's very easy to do, but you have that kind of granular control. On Algorand, you can embed in the token, because we don't have like a smart contract layer, like a kind of an Ethereum model. It's all assets are in the base layer. You can turn on and off an asset. You can have a clawback feature in the assets. You can kind of whitelist within the asset. Now, before anybody freaks out, once you declare that you can withdraw, that you're not going to be able to claw back the token, you can't change your mind later. But you know up front, this token might be clawed back, or it might not have the ability to do that. So my point is that Web3 gives you the tools to enforce sensible regulation much more than traditional finance does. So the regulators, I think, should be taking a much more benign view of Web3, and I think they will continue to do that.
Yeah, and so just kind of a follow-up on that, what will it take for more traditional institutions to move on chain? You talk about some of the regulatory things you might be watching. We heard President Trump talk about calling on Congress to pass a stablecoin bill. So how do you think that kind of all works together to boost adoption there?
I mean, the bad thing about traditional finance is that they protect turf, like everybody does. The good thing about traditional finance, though, is that they love money.
Yeah.
You know, and so we are going to lead, I think, probably with cost savings and better customer experience, and stablecoin legislation is going to be key to that. So I really hope we can get that done. The problem, though, even for the willing, besides like convincing upper management and all of that kind of stuff that they've been going through, and this point has been made in the past on this conference, but the hard part is kind of almost over now. We're in the hard part now. It will get easier going forward. But the idea with finance, though, it's very hard. It's so interconnected. It's very hard for one mover to move first. And so we have to reach a tipping point where everybody moves, because they're all these balance sheets, as I said earlier, they're all talking to each other. So I think we're a little bit like in this period now where we all have to kind of move forward together. That's going to be tricky. That's not easy to do.
Yeah, and we have a few minutes left. Would just love to kind of hear your thoughts on, you know, maybe 5-10 years down the road, what sort of world are you envisioning in terms of how blockchain tech, tokenized assets are kind of integrated into everyday life?
Everyday life. Well, I think, first of all, the customer experience will be much more like their traditional finance experience. This, 24-word mnemonic or 12-word mnemonic, and the scariness of you're going to be able to pick to be much more easily in a custodial environment or a much more friendly, Web3 environment, self-custody environment, and we will find things in between. So we're a proud member of the DREC Alliance with Cardano and Hedera and a number of others, where it's a little bit not quite custodial, and it's a little bit like not quite your, not your keys, not your coin, but we share keys, and it's a kind of a multi-sig approach. It's pretty interesting. So the industry keeps coming up with these new innovations, but I will say that what I think will happen is that traditional finance, every player will get tired and will no longer tolerate that their money is just sitting there doing nothing. This will not be acceptable anymore. When you hold collateral with your bank, and your bank is of course earning money on your collateral, but you're not earning money on your collateral, your initial margin, your variation margin, all of that, putting the ability to embed yield and with quick transferability, that combination is incredibly potent. And so I'll give you just one kind of far out example of that is I will take my Aberdeen money market fund, which is yield bearing, and I will go to your coffee shop and I will buy a cup of coffee with my tiniest sliver of my Aberdeen money market fund, and I will be earning yield until I hand this to you, at which point you will be earning yield on this little tiny piece. So, cash is an asset, apartment building is an asset, they're all assets. This continuum will get just completely blurred and more liquid, I think. That's my futuristic prediction.
And what might hold that up?
I think what could hold that up again is this. The coffee shop has to be able to take it. I have to be able to give it. There's just a lot of coordination in the beginning for this. But then once you get to this tipping point, then it will be explosive, right? I mean, you and I didn't imagine when we had our first interview that we'd even be here. That we'd even be here right now.
Right.
And so when we talk again, when I talk after the president again in 3 years from now, we're going to be talking about stuff that we didn't even think we would be talking about here, right? But it just we just have to kind of keep. We do a lot of work on education, a lot of work on global education. We are doing, payments into Afghanistan and now into Syria. And I think that these countries are also going to kind of leapfrog the traditional markets that we know in the West and the United States because they get it. They understand that with digital payment, they don't have to wait in a super long line to get aid payments, right? They know that they can hold value in the US dollar instead of in their depreciating, highly inflationary currency, right? Aid agencies know that if they don't want payments to go to the Taliban, if they track those payments on chain, they can know that and they can represent that to their own regulators. All of this, it's going to be a combination, I think, of entrenched players moving forward and the outsiders leapfrogging as well, and that's how we'll get to the promised land.
Yeah, thanks so much, Stacey. Look forward to seeing who your next opening act is. The president today, who knows tomorrow, and we have a great lineup of speakers coming up next. So thanks so much.
Thank you so much.
Please give a warm welcome to Michael Saylor.